Yes, it is. Yes, indeed. Well, thank you very much to everybody, and that is the case. Let's get kicked off on exactly where we're supposed to be today. We did see the Kwacha go up still. It still lost value in terms of the net from yesterday, but we did see the effect of the central bank policy announcement of the increased statutory reserve ratio when we saw intraday trading. In fact, we actually saw the Kwacha drop from its open. So we saw it actually go down from 1917 to 1916. So we did see that trend, but unfortunately, between the 2 days, we still see the Kwacha go down by 0.22%. But it is showing signs that the banks are being cautious about this movement, and I think they did ring out a few of the speculators. We will see today if we have continued to actually shift from. Sorry, I think we're having an echo here. If we have continued to shift from the we still have this going on. Sorry, people. Yeah, it throws off. Unfortunately, we're dealing with a lot of data here, and sounds in the background sometimes do that. So we are seeing that it is continuing to shift a little bit more towards negative. Now we did see the rand. We did see the rand moving down about one. Was it losing value? The Kwacha the rand losing value about 1.78%. So we did see the rand go up to 1.12 due to a strong rand as well. So 2 days of rand rally, mainly because the Central Bank of America is actually starting to slow down its rate hiking cycle. And because it's starting to slow down its rate hiking cycle, it's actually leading to a lot of the other currencies starting to gain strength, while the dollar on the whole is getting weaker globally. So you have a global dollar that's actually getting a bit weaker, and therefore you're starting to see the rand strengthen in the opposite direction, and that reflected here positive. That reflected here negatively, unfortunately, because that actually leads to higher rates of imports for us as a country. Now, we are seeing obviously the dollar is up 5.91% year to date, and the rand is up 5.49%. So we're seeing the rand actually even catching up with the dollar and starting to all regularize. Now, the big risk with the rand is that South Africa is our import source. So I've always said that whenever I see the rand picking up in cost and I see inflation coming out of South Africa, that affects us as a country. Now, going into the commodity space, in commodity markets, we did see that copper dropped again by 0.36%, with the expectation, obviously, that rate hikes are going to continue in the foreseeable future of the U.S. Now, we're also seeing that the oil price also dropped as well yesterday. The oil price came down to about 81.96. That's our main point that we have to look at. Oil price came down 81.96, down 1.48%, mainly because of increased inventories in America, still signs, and also a strong job market, which is likely to continue the Federal Reserve to keep raising rates. Now, gold also dropped yesterday about 0.82%. So gold in dollars is up only 5.15%. Oil down 4.64%, with copper up only 7.78%. So we've lost some of the gains from copper. We were seeing it at 11%. For the crypto traders, we actually have seen, remember, Friday is a futuristic day. So for the crypto traders, we have seen a 0.61% upwards in Bitcoin in Kwacha, meaning that Bitcoin year to date in terms of this from 1st of January is up 51.93%. Now, I'm going to say a warning here, okay, because I always seem to get misquoted when it's time when I speak about cryptocurrency. I always say that you've got three options for what I call wealth insurance. Wealth insurance, because I know someone's going to come back in here and say, no, but you were hype. I'm not hyping this stuff. I'm telling you what options you have to invest in. Cryptocurrency is very volatile, okay? Very, very volatile, and it's new. But it does serve a purpose in something that opposes the market. When you see a broad market downturn in terms of bonds and you see a broad market downturn in terms of stocks, you often see that the crypto sector is an option for people to be able to invest in as something that is what we call wealth insurance. Now, the advisory note I give to as many people is do not exceed 5% of your portfolio or 15% of your portfolio in total in these three things: cryptocurrency, gold, and dollars. Do not exceed 15% of your portfolio. They're just there to protect you from broad market downturns in bonds and stocks. I am going to stress this again. Vernon, because I always find myself being misquoted on this issue. But I am actually trying to make sure that we advise the people on how to run their portfolios in the safest and most interesting way for them. So we also are seeing the same with Ethereum. Ethereum was also up. So the cryptocurrencies are actually performing in a positive light for the investor class in that group. So obviously, when you do look at when you do look at your outlook for not just for the main market, for the commodity market, then you do see that you are seeing what we call defensive trades are starting to be the beginning. Now, I'm going to say this again, by the way, for anyone. This is a very similar trade to what we saw last year, very similar trend to what we saw last year, where we saw the defensive assets, be it gold, dollars, and crypto, opened the year strong while the stock market opened weak and the bond market opened weak. But then halfway through the year, we saw that trend change. And especially when the central bank came in a muscular fashion. We have seen the central bank coming in a muscular fashion. So it's not a good idea, people, to go loading up on dollars and bonds and gold at the moment. It is a good idea to hold them just in terms of that wealth insurance where you're ready to see them go, but they're just an insurance against your main portfolio. But to hold them to as your majority portfolio is seen as relatively dangerous. So I would advise people to always look at it more as a cautionary more than anything else. Now, looking into the bond market, also today, just to also give the percentage of Ethereum. Ethereum was up 2.49% yesterday and up 48.12% year to date, while gold is up 11.75%. So we can see that the lead parts of our portfolios are the defensive points, Bitcoin, Ether, and gold and dollars, while the stock market and the bond market are holding relatively flat. Looking at the bond market, we did see a 0.06% bump up on the bond index, which has taken us to year-to-date growth on bonds of 3.13% on the secondary market, while we're seeing the GRZ bond index in dollars down 0.15% due to currency and down 2.61% year to date, with the interest rates remaining flat at 23.58%. Now, the issue for me, I think, with the 3.13% in terms of bonds year to date is that we are probably still yet to see a little bit more inflation in the system. Remember that we had very high price hikes last month, which are probably going to translate in still the problems of the shortages of food and also the cost of food. Remember that food doesn't grow and magically appear in a milling plant. Maize doesn't grow and magically appear in a milling plant. It has to move there by a truck, which puts diesel in it, and diesel prices went up by 12%. So that is going to reflect in the cost of milli meal or in the cost of maize. Even if they try to put on more maize onto the market, remember that you've countered that by also increasing the cost of the actual of transporting the commodity around, and transportation costs will catch people out, and they will actually start to filter into food costs and living costs. So that is the current situation of our country, and we actually are seeing, obviously, our stock market is still trying to get off its heels and get started. It has been a sluggish period for the Lusaka Stock Exchange. It has been a sluggish period for the Lusaka Stock Exchange, but once again, this is pretty much par for the course at the beginning of the year. Now, opening up quickly to the economic calendar before we actually get into the major trades, before we get into the major news of today, which is what I call the bank analysis, and I want to talk about a futuristic Friday conversation called the environment and poverty. Okay, I want to actually try and dabble into that today, but looking at yesterday's data, because we have had a rich week in terms of data. Well, in fact, let me go through this week's data because I think we haven't touched the calendar as much as we should have this year. At the beginning of the week, we did see Kenyan inflation holding at 9. We did see that sentiment data coming out of the EU, whether it's business climate data or consumer confidence data, all came in stronger than expected, or at least less weak than expected. While the consumer confidence was weak, it was still less weak than expected. And business confidence data, the business climate data also picked up, and services sentiment data. So people's growth expectations have picked up in the European Union at the same time as they're trying to pull down rates. Now, interest rates in Kenya also at the beginning of the week stayed flat at about 8.7%, even though they've managed to maintain their inflation at 9.1%. They really did have higher inflation earlier, but remember, they got rid of their subsidies and now they've been able to contain it. Chinese composite PMIs at the beginning of the week on Monday came in positively about 50.1 for manufacturing, getting them out of the negative. And that is what has been keeping some of the commodity markets doing well and what they mean by positive. But I always say the greatest transition in China actually has to do with the fact that China is an aging population with a shrinking, as an aging population that is shrinking and that is shifting more to services. When countries become more urban, rich, and aged, they often tend to become more service-oriented in service-oriented markets as opposed to industrial. So the days of cheap China and cheap Chinese manufacturing and so forth, I think those things are running away, and China is mainly now going to be a service-driven economy because that's where most of the growth is coming. So the 54 PMI in services for China has outshining the 50.1 PMI for manufacturing, is showing the transition to a service-driven economy. Other things that we're seeing in terms of the data that came out on Tuesday, we did see that money supply in South Africa, though growing, did come out at a slower pace. Came in at about 8.6%. While we also found that Nigerian foreign reserves did slightly grow, while Ugandan CPI has stayed at about 10.4%. So we are seeing that the world around is starting to cool down with inflation while Zambia is picking up. But big news from that week was GDP data came out of the EU showing 1.9% GDP growth, slower than expected GDP growth, which was expected to be 2.2%, but only came in at 1.9%. While mortgage approvals in the UK have also slowed down, that's going to hurt a bit of the copper. That's going to hurt a bit of the copper sentiment as well for the year. Now, going into the middle of the week, very quickly, we did pick up on PMIs coming out of. We did pick up on nationwide HPIs coming out of Britain, which is inflation readings of 1.1%. And that's why Britain gets to slow down its rate hikes, with CPI data coming out of Europe also coming down from 9 to 8.5%. Core CPI is also coming down from 5, so it's staying at 5.2%. So Europe is experiencing an inflation slowdown simultaneously, but it is and added to that on Wednesday, we did see that U.S. mortgages have also slowed down in terms of the mortgage index, but the mortgage rate is still 6.19%, which is indicating that there is a slight tick down when it comes to oil price, when it comes to interest rates. Finally, on Thursday's data, we did see that the Bank of England did raise interest rates from 3.5% to 4%. So they're still raising by 0.5%. So you did see signs that the BOE is still raising interest rates, though there are some who are now starting to vote unchanged. You did see there's no one voting to cut rates, but you can see that they're voting to keep rates unchanged, which means there's a slight shift from the 9 members who are voting to keep rates up or to raise rates up. Simultaneously, we did also find that the U.S. Federal Reserve did also have its rate decision with 0.25% in terms of their rate hike. That is a change from the 0.5, and that's been spurring on the U.S. Stock Exchange, and that it was actually been pushing upwards. Malawi also had its interest rate staying at 18%, so it also kept its rates flat. So everyone is either slowing down their rate hikes or dropping. Egypt kept its rates flat at 16.25%. So interest rates around the world are also staying generally unmoved. And we're also seeing service PMIs again in China, which has a second read called the Caixin Services PMI up 52, showing growth in the service sector, which is outshining the manufacturing sector. Finally, Vernon, taking a look at today's data, we're waiting on inflation data coming out of Turkey, which is down to 53%. Previous Turkish inflation was 64%. In fact, it got to 100 at one point. Now we're also looking for PMI data coming out of Germany, PMI data coming out of Italy, PMI data coming out of Europe, and PPI data coming out of Europe as well to see whether supply chain inflation is still upwards or it's still going to start coming downwards in terms of global and payrolls data. Big news today is American payrolls data. Once we see payrolls data, we'll be able to see whether the Federal Reserve is going to continue aggressively or come down. Expectations in U.S. payrolls data is that expectations in the U.S. payrolls data, non-farm payrolls, is that 185,000 jobs will be added to the U.S. payrolls versus last month's 223,000. Anything exceeding that will probably lead to a Federal Reserve trying to be more harsh with inflation, with an unemployment rate in America expected to be 3.6%. But there are signs that the U.S. Federal Reserve is trying to turn the course because it believes it's winning the fight. But Federal Reserve Chair Powell did say that he's going to still treat inflation as public enemy number one. And finally, just to take a look at our stock market before we get into our main discussion for today, we did see the stock market tick upwards slightly yesterday, mainly because of good trades from Zambeef, Zafico, and Zanaco, which were all up 0.8, 0.8, and 0.31%. But the exchange is still down 1.02% year to date. So we are still seeing that in terms of the index itself, it was up 0.09% yesterday, but down and gained 0.5% on the week. But on a 4-week basis, still down 1.26%, and year-to-date down 1.02%. So we have a few positive signs starting to creep into the market. So, Vernon, it is time to have our quick analysis of what I call bank analysis. Banking sector financials for the year ending December 2022 came out yesterday. Not just the banking financials for a few of the banks, which the analysis were about last time, about who's the number one bank. Now it's time to take a look at what we call sector-wide analysis. And sector-wide analysis, we did see some interesting trends when it comes to banks. We went through their income statements and we were able to pick up what has been happening when it comes to banks. So most importantly, profits in the banking sector were up 10% from the year before versus the previous year, where we saw profits rise 252%. You heard me. In 2021, banking profits rose by 252.24%. This year, they rose only 10%. And we have seen that their banking profits are currently sitting at 5.684 billion kwacha, which is a 29%. I'm saying this again, 29% profit margin. In terms of, it's a 29% profit margin. Now, in terms of versus full-scale revenue, and I think this is just a number we all just want to pick. We all just want to pick in terms of our mind. In terms of total revenue, bank profits are currently at about 23%, which means that these are relatively highly profitable institutions versus many of the even just the listed companies. But we are seeing that banking profits are sitting not at just record profits, at record profitability. Let me give you a quick example, Vernon. In 2016, banks had 900 million kwacha in profits, okay, as a whole. 989 million kwacha in profits as a whole. Today, 2022, we're talking about banks with a profit of 5.68 billion kwacha. Bank profits have grown fivefold, almost sixfold, actually, okay, in just the last 5 years. That is unbelievable. The level of bank profit growth. If you're looking at such a scale, and all of it happened during the pandemic. 2021, we saw bank profits jump from 1.4 billion to 5.1 billion kwacha. This is the banking sector as a whole, and we saw bank profitability go up. The net profit margins of banks have gone up from 10.3% to 23.4%. That is a huge amount. So not only are banks having more profits, they are more profitable. So in other words, they're making higher costs while they're making more money while containing their costs. And one thing I can tell you right now, Vernon, is just the top two banks and their profits make up close to, in fact, let me just say that, the top two banks and their profits of 1.1 and 1.3, 2.3 make up about 40% of all bank profits. 40%. Okay, that's how big this situation is. So bank total revenues. Now, I don't count net interest. I count total revenues. Bank sector's total revenues yesterday moved up from 24 Yesterday, we saw the reads come out for the end of the year as 24 billion kwacha. So our banking sector made 24 billion kwacha in the year 2022 as a combination of interest income and non-interest income. And we saw that grow only by 2.92% versus the previous year of 37.21% growth. So we did see slower growth. But what was the main contributor to bank revenue growth? Well, the main contributor to bank revenue growth was, and everybody will understand this, government bond income. Government bonds income grew by 61% following the previous year, where government bonds income grew by 89.69%. We've seen massive growth in the government bond sector, and we even saw a contraction in treasury bill income from the banking sector. So we didn't see much in terms of there hasn't been any other form where income growth came. If you're looking at total interest income, it grew, yes, by about 4.4%. Versus, and the other parts of the market that did see a little bit of growth was Kwacha retail loans, which grew by 6.93%. Foreign currency loans to companies grew by 10. Income from foreign currency loans grew by 10.15%. But the key performer was government bonds, which grew by 61.24%. We did see also commissions and trading, in other words, trading fees, banking activity fees, also up by 11.5%. So the main contributors to the growth of the banking sector was one, bond trading. For banks, bond trading was the number one. The number two was fees and accounts trading. Obviously, fees were a huge component of growth for the banking sector. Now, we didn't see much in terms of other contributions from other areas, but retail and forex loans for corporations. So these were the top 5 contributors to revenue growth for the banking sector. Now, if you're going to see compositions, and I think this is what's actually quite interesting, in terms of where revenue comes for the banking sector, the number one contributor, the number one contributor is still interest income. But in 2017, and I want to read this out, in 2017, government bonds only contributed 7% of banking income. Today, in terms of this ratio, it now contributes 22% of banking income. And government bond income is actually bigger than any other line alone. It's actually big. It's actually bigger than any other line. It's bigger than retail loans. It's bigger than retail loans. It's bigger than corporate loans income. It's bigger than treasury bill income. It's the biggest individual line of income alone for the banking sector. If you're looking at what's actually been going on now, if you take a look also, by the way, Vernon, if you're looking at the composition of loans, composition of income for banking sector, so for government bond income to be that strong, you are seeing that the amount of money that banks are making from government securities trading has risen from 27% in 2017 to 39% in 2017. While you're looking at what they're making from loans, now what's meant to be the core business of banks, okay, which is actually loans to people, have gone down since 2017 from 38% down to 30%. So officially in 2020, banks are making more money from government securities trading than they are banks are making more money from government securities trading than they are from making money lending to people. So this is mainly due to the fact of what we call legacy assets. It's the legacy assets that were doing this. The government bonds that were issued in the 2 years before with very high interest rates are giving these banks immense amounts of money that they're actually able to make during this period. And also, we haven't seen much in terms of change, in terms of trading, how much they're making in terms of fees and commissions from trading. That percentage of their total revenue has dropped from 19 to 14 since 2017. And we have seen that FX trading is only up slightly, and it's stayed the same in the last 3 years. So the big transformation for most banks in terms of their revenue is coming from the government bond sector. Just last year alone, Vernon, so that you understand how big this is. And for everyone, just last year alone, we actually saw that government bonds composition of revenue was sitting at 14%, while was sitting at 14% of total revenue. This year, it's now 22% of total revenue. So it's the only one that's made a huge chunk, while treasury bills have gone from 22% to 16%. So it's evident that banks have become government bond trading houses, but they are trying to make a transition. So there's going to be some other data that just contradicts this a little bit. But I also just want to quickly take a look at the asset books of the banking sector in terms of what is the the major assets of the banking sector. Now, major growth in assets that we saw, the fastest growing assets that we saw of the banking sector altogether, we saw notes and coins drop by 14%. Balances to Bank of Zambia rose by 39%, mainly because of current account, which grew by 99%, which doubled last year. And we saw statutory reserve ratios up 23 as well. Now, the other thing we also saw was balances abroad. Balances with financial institutions abroad rose by 17.9%. But the biggest winner of the all, as usual, in investment securities. We saw that investment securities, treasury bills at clearinghouses, and government bonds grew altogether combined by a 35.48%, with government bond portfolios growing by 52.32%, following last year's government bond portfolio growth of 111%. So banking bonds, if you're looking at the books of how much banks are holding in government bonds, they have grown massively. Okay, their bond portfolios have basically exploded right now. And for the first time, Vernon, I actually wanted to say this, banks hold more bonds than NAPSA. It usually was NAPSA first. So it was foreign investors, NAPSA, then banks and other pension schemes. But right now, it's actually foreign investors, banks, then NAPSA, then pension schemes themselves. So this is the first time we've actually seen banks holding close to 25 billion kwacha. I'm going to say this again, 25 billion kwacha. In other words, 1 in every 6 kwacha of government bonds is held by a bank. The other 1 in 6 is held by NAPSA. So 1/3 of the government's debt is owed to banks and NAPSA. And then you've got foreign investors who also own another one of that. So half of our government's debt in terms of its government bond portfolio is sitting with NAPSA, banks, and foreign investors. And then we've got other institutions that come to play in some of that. So altogether, that's what we're seeing in the banking sector, that the key drivers of growth were mainly bonds and bond trading, bond holding, actually. Government banks were really doing a lot from bond holding. And then finally, in terms of where their deposits were mostly growing, we did see deposit growth, or at least sources of income growth. We did see deposit growth, mainly our biggest source. We did see demand deposits grow by 27%, but it was time deposits. People dropping money in there for a little bit of time with set time deposits. That was sitting there at 39.18%. So that's actually good that banks are getting flooded with capital, and they're also getting a lot of savings, even though they did see a lot of cash sitting in the accounts. Now, in terms of their holdings at Bank of Zambia, we only saw that grow by 2.32%. So the Bank of Zambia has stopped shoving money into the banks, and therefore banks are now growing their deposit base through their actual clients, and also a 74% growth from balances due to financial institutions in Zambia. So you are seeing that kind of growth also happening. And therefore, therefore, shareholder capital grew by 27% last year versus 44% the previous year. In other words, Vernon, there's no other way to say this. Our banks are stinking rich. They're making a lot of money. Our banks are making a lot of money. Now, just added to this, I wanted to take a look also in data that talks about where are new bank loans going. So, in as much as banks are making their money from government bonds, one good sign is that banks are borrowing less to the main parts of they're borrowing less to the government and borrowing more to the private sector. So here's a little bit of data that we picked up from here's a little bit of data that we picked up from the credit monitoring survey of the central bank, which shows how we've actually transformed in terms of debt and where new debt is being issued. In other words, new loans are coming. From what you can see here, government securities, GRZ securities were 27% of new loans issued in 20. So not GRZ securities only, but GRZ loans were 27% of new loans issued. Big businesses were getting 44%. And as you can see, small businesses had this tiny little slat of 9%, and then households were 20%. As you can see, since 2021 to 2022, you see the GRZ bonds are shrinking to 21% to 5%. Even as the loan book is growing a little bit, big business has stayed 44%, but the growth is mainly coming from households. So households are getting loans, but probably at very high interest rates. Households are now 38% of new loans issued, while small businesses are 14% of new loans issued. So in other words, the government is stepping back on getting new loans. The banks are making money from bonds, but those are bonds they already acquired and are holding. So it's not fresh bonds that they're getting, but they're getting new. That it's bonds that they're acquiring and they're holding. But the main thing you're seeing that new loans are mainly going now to small businesses and households who combined, Vernon, are making 52% of new. And that's the bottom of the economy. So that's good news. The bottom of the economy is getting 52% of new bank loans being issued. Now, if you're looking at loan disbursements, here's some of the data with estimated 2022 data from the Credit Monitoring Survey. As you can see, government lending, which is the second column here, has dropped from 9 billion down to 1.8 billion. So in other words, banks are not issuing as much, or loans are not going as much to the government. Now you're seeing SMEs finally broke out of that 3 billion kwacha trap, and now we've seen 5 billion kwacha getting towards SMEs in terms of fresh loans. But households have been the sprinter. Money has we've gone from 5.9 billion kwacha going to households to 14.05 billion. So these are salary back loans that are now freely going to people again. So maybe we actually got a mortgage market that's actually fighting again. We've got vehicle asset loans, and we've got all sorts of other loans that are actually coming out again. And we actually even seen a slowdown in big business loans. So the lower parts of the economy are picking up the slack and actually getting a bit of the loan book. Now, if you remove the household loans and we're looking at commercial loans, we'll see that government was getting 34% of commercial new loans, and that has shrunk down to 8%. Small businesses have now gone from 12% to 22%, but obviously big businesses are still getting the chunk with 70% of most of the new loans being issued. So that's some data to look at. Now, I want to take a look at this trend also for everybody here of when did banks drop off? And I've actually done it by administration to show you that this is a policy change. When the loans have stopped going to the loans have stopped going mainly to the government. As you can see in the green part, we all know what that means. That's 2020 to Q2 2021. You can see the astronomical levels of government loans that were being issued. And this is mainly a lot of securities that were coming out. But you can see since 2021 quarter three, there's actually just been a literal drop off here from 2.8 billion down to 150 million. We've never exceeded $1 billion in a quarter in terms of loans to the government up to this point, which shows that what's happening is the government has tightened its belt as well. It's not just people that have stopped lending, the government has tightened its belt. But let's take a look at what this also means in terms of small business and household loans. You can see there was steady growth, but there was a strong pickup, especially from quarter four 2021 going into it. And we've seen household loans are now sitting at about 3 billion kwacha. It's going in credit to households every single quarter. That's good news. That's credit that's for building, credit that's for getting cars, credit that's for even small businesses if they want to start. That's credit moving to the households. And if you're looking at small businesses, which are small farms and MSME businesses, they're now sitting at way above $1 billion consistently and possibly about $1.5 billion. So we're seeing a lot of growth in the bottom part of the economy in terms of loan growth. So in terms of the financial sector, and most of the data that we're seeing is banks may be profitable, but we're starting to see capital getting to the bottom. So we're starting to see the effects of the government stepping back and capital finally sieving to the bottom. But we are still trying to deal with the fact of how are banks making so much money in such a tough time. But that being the case, Vernon, I will actually now go to a bit of something I wanted to talk about, which is, and hopefully I'll have the time to finish this point. Cross my fingers, because there's a video or two I wanted to share on a trend, and I don't know just to quickly your thoughts in a minute or two before we touch on this trend called poverty and environmentalism. Okay, so let me get this quickly started. This is a video from Dr. Jordan Peterson, who's talking about poverty and environmentalism and what we should think about it as a whole.
About 10 years ago, and I concluded a couple of things. One was that the best way forward to a sustainable planet is to make everyone who's poor rich as fast as you possibly can.
And that's Lomborg's position,
not
too.
to put limits to growth on, because
Right.
it turns out if you get people above about $5,000 a year in average GDP, they start taking a long-term view of the future instead of scrabbling around in the dirt trying to get lunch, and you're going to burn everything up around you to stay alive if you have to.
Right.
But if you got a bit of wealth and now you can think over, maybe a 20-year period, which is quite the damn luxury, then you actually start being concerned about, the quality, the aesthetic quality of the local environment. And so I was so excited when I found that data, because I thought, oh, this is so cool. It means that we could have our cake and eat it too. We could work really hard to provide cheap, reliable energy, at the lowest cost possible to the widest number of people worldwide. And the emergent consequence of that would be the whole planet would clean itself up. So wouldn't that be great? Because we could make our goal the eradication of absolute poverty, which we actually done pretty good at eliminating over the last 15 years, but we could really make that a goal. And then one of the consequences of that, inevitable consequences, would be a greener and healthier planet. And then you think, well, why aren't we doing that?
So that's just something I wanted to just also give you in terms of the view that was Professor Jordan Peterson talking to Joe Rogan, where he was saying, you want to be very careful about this environmentalism conversation if it comes at the risk of poverty reduction. And I want to quickly show another video clip before I give my final thoughts on this issue. I want everyone to always think about the battle, because the rest of the world is talking about environmentalism. They're rich. Zambia, like the rest of Africa, is dealing with poverty and environmentalism. And that's a very tough line to deal with, because carbon is what a lot of these countries use to lift themselves out of poverty. And today they're coming to lecture us about keeping the environment clean after they've burnt up the ozone, and then they want to come to us and tell us not to use the things that they use. So we have to kind of toe the line of what we're going to do to alleviate poverty. This is another conversation that was done at the London debate, and it's going to be a bit harsh-tongued. It's got no curse words in it, don't worry, but it's a bit harsh-tongued, and it states this whole issue of poverty versus the environment.
And that issue is climate change. We're told that many of you suffer from climate anxiety. You wish to save the planet. Now, what are we to do about this huge problem facing humanity? What can we in Britain do? We can only do one thing. You know what? This country is responsible for 2% of global carbon emissions, which means that if Britain was to sink into the sea right now, it would make absolutely no difference to the issue of climate change. You know why? Because the future of the climate is going to be decided by poor people in Asia and Latin America who don't care about saving the planet. You know why? Because they're poor. Because they're poor. I come from Russia, which is not a poor country, it's a middle-income country. 20% of households in Russia do not have an indoor toilet. What they have is an outdoor toilet. And I don't mean one of those nice portaloos that we get here. I don't even mean a Glastonbury portaloo. I mean a wooden shack with a hole in the ground that holds a collected fermented memory of the last 10,000 visits. How many of you are going to go home tonight and say, let's rip out our bathroom? And if you're not, why should they? 120 million people in China do not have enough food. I don't mean that they don't get dessert. I mean they suffer from malnutrition. That means that their immune system is breaking down because they don't have enough food. You're not going to get them to stay poor. Imagine you're Xi Jinping, the leader of China. When you were 10 years old, there was a revolution, a cultural revolution in your country, and people came and they put your father in prison. Your mother had to denounce him. Your sister killed herself. And you, no longer enjoying the protection of your formerly powerful father, were sent to a village where you lived in a cave house. And here you are, decades later. You have clawed your way up the bloody and greasy pole of Chinese politics to be the undisputed supreme leader of the very Communist Party that destroyed your family. And you know that the main thing you have to do to survive and to stay in power is to deliver the one thing that the people of China want. prosperity, economic growth. Where do you think climate change ranks on Xi Jinping's list of priorities? A third of all children who live in extreme poverty in the world live in India. That means they are starving and dying of preventable disease. Now, about 15 months ago, my wife got pregnant. And for 9 months, we talked about what our boy would look like, what he might do when he grows up. We looked at baby scans and videos on YouTube about what the fetus looks like at 9 months and 12 months and 20 months. And eventually he was born. And he is this cute little bundle of joy. He's cuter than about 80% of puppies, right? Now, if you said to me that I had a choice, either my son had a serious risk of starving or dying from a preventable disease in the next year, or I could press a button and he would live. He would go to school. He would bring his first girlfriend home. He'd go to university and graduate. And then he'd get a job and get married and have children and become a man. But all I have to do is press this button. And for every day of my son's life, a giant plume of CO2 is going to get released into the atmosphere. Now, you're all very young, and most of you are not parents. Let me tell you something. There is not a parent in the world who would not smash that button so hard their hand bled. You are not going to get these people to stay poor. You're not even going to get them to not want to be richer. And so, I put it to you, ladies and gentlemen, there is only one thing we can do in this country to stop climate change. And that is to make scientific and technological breakthroughs that will create the clean energy that is not only clean, but also cheap. And the only thing that wokeness has to offer in exchange is to brainwash bright young minds like you to believe that you are victims, to believe that you have no agency, to believe that what you must do to improve the world is to complain, is to protest, is to throw soup on paintings. We know that the way to improve the world is to work, to create, it is to build. And the problem with woke culture is that it's trained too many young minds like yours to forget about that.
And with that, Vernon, I'm just going to leave one final thought on that. We have to innovate if we want to fight climate change. You can't just tell people, no, you can't do this, you can't do that. You cannot look at a mother who needs to cook food for her children and tell her she can't use Malasha when you have not provided an alternative. And that is the problem that we're having in this debate. A lot of very wealthy people who sit in very nice houses, who have the ability to acquire things, don't understand that we must make energy that is clean, cheap. Okay, because it has to get to the bottom of the economy, because 90% of this country wants to access electricity, they want to access water, they want to be able to cook food without having to chop a tree down, and they want to have the conveniences that you have in your house where you press buttons for the things you want. They want those things too, and you can't deny them that. You will not deny them that. Okay, that's the truth. So if we want to battle climate change, we have to start looking at things like making biological charcoal. How do we get biochar from waste material? How do we innovate and bring solar to get people off the grid? It is innovations. It is green bonds being raised. It's investment in new ideas. It's engineers thinking about new ways to come up with clean energy, not a bunch of protesters. That protest culture that is walking around has to come to an end. Innovation, thought, design, that is what has to change Zambia. I'm all for a clean environment. I love that idea, and I love preserving my environment. But I know that I'm pragmatic enough to know that you will not keep people poor at that expense. And that's how we fight climate change. And I want everyone to try and get from that. If you're angry that a white man said the word they're poor, that's not going to help us get anywhere. But be realistic enough to know that it's up to us to start thinking differently about how we deliver electricity to people, because you're not going to stop electrification in Zambia for the purpose of a few flat tree-hugging and poster-holding children who think they want to be the next Greta Thunberg and see if they can raise some money. Ain't going to work here. And that's what I'm going to leave it at, Vernon. And for that, that is our futuristic thought for the week. Thank you very much.
I appreciate it. Thank you, Mtwale, for your I think that one was personal for you. Thank you so much for your time today as well.
Cheers, man. Have a good day.